agenda on regulatory items. Can I have any mover for adoption of the agenda on regulatory items? Any mover for adoption of the agenda? Thank you. Noted, Ms. Maseti, and oh, okay, everyone. The agenda has been adopted. Thank you very much. We will then go into the reports themselves. Please, members, just make sure that you sign the declaration of interest on regulatory agenda items. The declaration is on board pad. Make sure that you sign it and send it to Secretariat. If we can then go on to item 5, which is the Petroleum Pipeline Subcommittee. If we can get a report from the chairperson of the Petroleum Pipelines Subcommittee. That is you, Mr. Mkhize. Over to you, sir.
Chairperson.
Thank you very much, Chairperson. I will present, take the matter as read, and I will also then get the team to assist where required in terms of providing the explanations. There was a special meeting, PPS meeting on the 23rd that then dealt with the matter, which is the review of the tariff methodology for approval of tariffs for petroleum storage and loading facilities. We're moving from version 4 to version 5. Version 4.1 was piloted, and lessons learned from the pilot have been included in terms of the final version 5. And with regard to that, there is also there were papers also that were developed in the process, key amongst which is the volume rules and efficiency adjustment, because the rate of return methodology of its own has got a challenge of the absurdity where if the volumes decrease and then the tariffs go up, because you would expect that the numerator being the asset base remains, and then the volume which is the denominator reduces, thereby resulting in a higher tariff. But we have an appreciation that that must happen to a certain extent, because in practice you will find the situation where in a competitive environment the supplier of the service, which is the owner of the asset, would reduce the tariff instead to try to woo the clients, to use the facility. So it's that issue that is a challenge. But here specifically, Chairperson, we are requesting the energy regulator or recommending that the energy regulator approves the publication of version 5 of the tariff methodology for the approval of tariffs for the petroleum storage and loading facilities. Some features that have been changed refer to the deferred tax component having been removed to align with the flow-through tax allowance. That assets that are fully depreciated yet still in use are not included in the RAP. And then in the net working capital formula, the minimum cash balance component has been removed as the operating cash is deemed to serve the same purpose. The risk-free rate and market risk premium will be estimated based on data for the preceding 360 months instead of the 300 months previously. The liquidity risk premium is excluded in this version. The flow-through tax is the only tax approach to be used in the allowable revenue determination formula, in line with the harmonization project outcomes, and then the introduction of the provision for efficiency benchmarking through volume rules. The energy regulator is further requested to approve the transition period not exceeding 12 months in order to prepare the industry for the implementation of the adjustment factor and volume rules reason being that is very data intensive, and it's a little bit having some complicated in the sense that one needs to do some calculations and using formulas to do that. And we think that the stakeholders, they need to be fair with how that works. And the transition period will then assist in this regard. Because we also want to then later on use the same when we're looking at the pipeline tariffs, the setting thereof. And then we, in line with that, we then request that the energy regulator approve the decisions and reasons for decision document for the review of the tariff methodology, which is attached as Annexure B, and also to note the final report on piloting of version 4.1, which is attached as Annexure C. Chairperson, in terms of the deliberations, 9.1 does indicate what the issues were raised and how management has responded thereto, which we view them as being adequately responded to. With regard to the issues as to what was looked at in terms of the version 4.1 and moving to 4.2 under 5.3, these issues are outlined in the submission. The rest, as I said, Chairperson, I will take the matter as read, and because we have also presented it previously in terms of the piloting being extended by a year, so that we could be able to finalize some of the issues and
We've lost you, Mr. Mkhize. Mr. Mkhize, are you still on board? I see you're still in the meeting, but for some reason I cannot hear you. Mr. Mkhize, if you can please come back on board. I see you are now muted. Okay, colleagues, I'll just assume that Mr. Mkhize was done with his presentation, but I think the background to the review of the tariff methodology presentation to item 5.1 has been given in greater detail by Mr. Mkhize for consideration by everyone. Just for the benefit of members of the public, I apologize. I have not introduced myself. My name is Zandile Mpungose. I'm a part-time regulator member for the NERSA, the energy regulator. I am the interim chair after we have sadly lost, our chairperson, Mr. Mukwena. So I am chairing this session on an interim basis until such time that a chairperson has been appointed. Thank you. Colleagues, can I then ask if you can indicate through hands if you've got any questions to the item that has been presented by Mr. Mkhize, the review of the tariff methodology for the petroleum storage and loading facilities. Can I just see any questions or comments that you might have through an indication of hands? Thank you, Mr. Kumete. I think you seem to be the only one who's raised their hand at this stage. If you can please go ahead.
Chairperson, I am a member of the PPS, and therefore I had raised my concerns at the PPS that and they were handled in the manner that they were. I just wanted to point out that as indicated at the PPS as well, that I will not be in a position to to vote positive to support this. However, I am actually bound by the decision of the majority. Thanks.
Thank you, Mr. Kumede. That is noted. Any other question that we might have at this stage? Okay, thank you very much. From myself, there are no questions. I was happy with the presentation. I've gone through the item as well as the reason for decision, and I am happy with the item as is. So I do not have any additional questions. So if we can then go to the item, the recommendations are on page 14. They start on page 14 of 15 under item 11. It is recommended that the energy regulator approves the publication of version 5 of tariff methodology for the approval of tariffs for petroleum storage and loading facilities attached here too as Annexure A. The following are the salient features of version 5 of the methodology, which makes it different from version 4. A, the deferred tax component has been removed in the regulatory asset base, the RAB, formula to align to the flow-through tax allowance. B, assets that are fully depreciated yet still in use, are not included in the RAB. C, in the net working capital formula, the minimum cash balance component has been removed as the operating cash is deemed to serve the same purpose. D, the risk-free rate and market risk premium will be estimated based on data for the preceding 360 months. Previously, it was 300 months. E, the liquidity risk premium is excluded in version 5. F, the flow-through tax is the only tax approach to be used in the allowable revenue determination formula. G, the introduction of the provision for efficiency benchmarking through volume rules. And then the next item, which is 11.1.2, for the ER to approve the transition period not exceeding 12 months in order to prepare the industry for the implementation of the efficiency adjustment factor and volume rules. 11.1.3 approves the decision and reasons for decision on the review of the tariff methodology for the approval of tariffs for petroleum storage and loading facilities, attached here to as Annexure B. And 11.1.4 notes the final report on piloting of version 4.1 of the tariff methodology for the approval of tariffs for petroleum storage and loading facilities, attached here to as Annexure C. And if we can get, this item is for approval, that we publish the decision and we approve the decision and reasons for decision, and we approve the publication of the item. And I've just read the recommendation as they appear. If we can then get an indication through hands who is in support of the approval of the item. Okay, I've noted, I think we've got all hands of the members in attendance. Thank you, colleagues. I've got the CEO, Ms. Advocate Sithole, Mr. Sibanda, Mr. Mkhize, and Mr. Kumede, and Mr. Maseti as well. Thank you very much, colleagues. The item has been approved.
Chairperson, Mr. Kumede didn't vote.
Oh, I thought I saw your hand up, sir. Okay, sorry about that. Mr. Kumede didn't vote in favor. Okay, we've got Mr. Sibanda, Mr. Mkhize, Ms. Mpungose, Advocate Sithole, and Ms. Maseti, I believe. Thank you very much. If we can then go on to the next item, the item 5.1 has been approved. If we then can go through the minutes of the meeting of the 1st December 2021, which was meeting number 154 of the Petroleum Pipeline Subcommittee. Mr. Mkhize, if you can just take us through the minutes, if there are any key things, in the minutes that you think should be noted.
Thanks, Chairperson. I don't want to specifically maybe to go through the whole minute, but just to highlight that most of the issues relate to Transnet, the drawdown of funds for the decommissioning of the Durban to Johannesburg pipeline, which is a matter that deals with the whole of decommissioning that we're looking at, as well as the revocation of the oil tanking Green Road Kalulo application, the revocation of the license there for the construction and operation of petroleum facilities within the port of Mocha in Ravega, Eastern Cape. Those just some of the key issues, as well as matters that relate to the investigation that was being undertaken from our side, and we also dealt with a report on which then informed the review of the methodology, being the efficiency adjustment factor and volume rules. I'll leave it at that, Chairperson. Thank you.
Thank you, Mr. Mkhize. Members, are there any comments or questions on the minutes of the 1st of December 2021? Any specific questions that you might have for Mr. Mkhize at this stage? Okay, Mr. Mkhize, it does appear that everyone is happy with the minutes. There are no specific questions that have been posed on the actual minutes by any of the members. Thank you. We've come to the end of the presentations of reports by petroleum pipelines.
Chair, you've muted yourself.
Oh, sorry about that. If we can then go on to item 6, which is the piped gas subcommittee. If we can then please note of the meeting of the 1st of December 2021, that is item 5.2, the minutes of the petroleum pipe gas. Okay, thank you. The minutes have been noted. Thank you, members. If we can then go on to the piped gas subcommittee reports. Ms. Masetti, can I then request you that you take us through item 6, and which is, we've got reports from yourself, which is Gwande Gas Novo Energy calculation of the maximum gas energy price on a monthly basis, and also regarding to the frequently asked questions on the determination of inadequate competition in the industry. Over to you, Ms. Masetti.
Thank you, Chairperson. Chairperson, the first report that I have for the energy regulator is the application that we received from Gwande. It's Gwande Gas. And Gwande Gas is a new entrant. And it is also the second ever company in South Africa that imports gas from Mozambique. As we know that we only have Sasol that imports gas directly from Mozambique to South Africa. So this is the second one that will bring gas to South Africa, even though the volumes are quite small, but I think they are very important for South Africa at this stage to have such additional volumes coming into the country. And also for us to be able to facilitate such investment that has not happened for over 15 years, when everybody has been trying to get a hand on the gas that is in Mozambique. Gwande seems to have done so successfully. Right. So the application for the maximum price is for the period starting from October 2021 up until June 2022. And then they will apply for a new gas price as its financial year begins on the 1st of July of every year. So in this case, it will be 1st of July 2022. Now, the gas price that the energy regulator is requested to approve is shown on table 1, and all of the key components have been shown there. I will not be able to disclose the figures of that, but the maximum price itself is not the actual price that will be charged. That maximum price that they have applied for is 175 gigajoules, and that is the price that they will have to make sure that they discount from it in order to sell different volumes to different customers. And that price does not include the cost of service, which are the tariffs for a transmission or a distribution, depending on which pipeline that gas will go through. So it might be both distribution or transmission, or just transmission. Chairperson, therefore, will request that the energy regulator approves that price of 175 as the maximum that this company will have to charge, and that maximum will not be adjusted, and that the maximum price is exclusive of VAT. Discounts are allowed, and they must be in line with the pipe gas regulation in terms of the different volumes, and also in terms of Section 22 of the Gas Act. And the price that is approved is effective on the day that the energy regulator makes its decision, and the licensee is required to apply for the next maximum price 4 months before the expiry. And we also request that the energy regulator approves the reasons for decision for this application. Thank you, Chair.
Thank you, Madam Massetti. And members, we've got item 6.1, which is the Kwande gas application for maximum price of gas for the period 1 October 2021 to 30 June 2022, as presented by Ms. Massetti. If I can then see by hands who has any questions or comment on the item. Mr. Sibanda, please go ahead, sir.
Thank you, Chairperson, and thank you to Ms. Massetti for the item. Chair, I have 2 questions. The first one relates to Table 1. I see that the benchmark price that is reflected on Table 1 differs to what is calculated on Table 4. And I know that that benchmark price does play a role in terms of calculating the trading margin. And so I'm not too sure why there's a difference there between what is shown on Table 1 and what is calculated as the benchmark price on Table 4. But also, if you look at the calculation of the maximum price, it is actually a sum of the cost of gas, the trading margin, and the trading cost. So I'm not sure whether it's prudent to then reflect the benchmark price in that table. We may want to talk about it, perhaps, I don't know, in explaining the maximum price, but reflecting it in the table sort of like, I think, distorts the whole idea of how the maximum price is calculated. Just an idea or a proposal there, Chair. And then the other issue for me relates to the unintended consequences of this new methodology, and this is dealt with under paragraph 5.10 onwards. And perhaps this is a matter that's delegated to the PGS to deal with. However, given our experience with the unintended consequences of another methodology in PPR, I think it would be important to to attend to the concerns as speedily as possible. And perhaps at some point we might all be brought on board just to understand what the issues are. But I think it would be important to then deal with those matters as speedily as possible. And I'm aware that the submission does say that it's being dealt with at PGS. All I'm saying is let's try to make sure that we attend to those concerns as soon as possible before perhaps there's a lot of time that is expended in the market. Chair, I think for me those are the two issues that I wanted to raise. Thank you.
Thank you, Mr. Sibanda. Mr. Gumede, you may go ahead and pose your questions or make your comment.
Thanks, Chairperson. Again, I'm a member of the PGS, and the comment I'm going to raise, I have flagged at the PGS the issue around the possible issue of double counting, and I have stressed it because I do feel very strongly about it. And the idea would be that hopefully we will have a proper workshop on this, and actually go into the detail behind each of the approaches that have been presented there. And I think at PGS, I did indicate why my objections in terms of the especially in respect of recognition of profit, which I do believe in this particular model reflects it twice. But at any rate, the issue that I wanted to raise was that I think the public hearing we had last week on a separate matter kind of flagged this issue for me about the appropriateness of using a model that is based on spot prices, especially for something as volatile as, especially in spot prices for the particular part of the market where perhaps volatility might be a serious issue. That we really need to speedily look at this model and ask ourselves, should we not be looking at term prices, especially because there are term prices. We can have very good lessons from the regulation of the petroleum sector, which has gone through the same learning since early 90s, and even post the advent of democracy, all of the changes that have come, because it also uses proxies. So it's really about saying what is it that we can learn there, and what is it that is more applicable, especially if we want to promote use of gas. So I am in support of the recommendations, Chairperson, with all of the reservations that I've raised. Thanks.
Thank you very much, Mr. Gumede. That has been noted that you're in support. However, you have those reservations that you've made us aware of. Thank you. Can I then ask management to, Ms. Masetti and her team to respond to the questions that have been posed by Mr. Sibanda and also Mr. Gumede. Thank you.
Thank you, Chairperson. I will then start off with the questions from Mr. Sibanda. The issue of the table, of the two table, the difference there shouldn't be any difference there. The figures should be the same. So we'll just check what happened to table 4 as the figures should actually be the same. In terms of those components, the cost of gas itself, the trading cost, they should be the same, and then also the benchmark price should also be the same. So it's something that the team that will just verify and correct it. Thanks for pointing that out. And then I will then move on to the next question regarding the issue of the benchmark. Take note, Mr. Sibanda, I think the confusion is created by the wording in the methodology. because it is indeed confusing when you kind of add the benchmark price onto the calculation of the maximum price. It's not the right it's not the right way of doing it. So when it's shown in that manner on the table, it is actually wrong. So you've got to have the cost of gas and then add the profits. Then once you have done that, you must now compare that with the competitive benchmark, but not to add the competitive benchmark or the difference between those two onto the price. So that's one thing that we have emphasized, and Mr. Gumede has raised that, I think it's more than a year now. And I would like to give the energy regulator comfort in terms of the wording of that methodology to state that the methodology has now been sort of revised. It is out for public comment, and the members of the PGS have provided their input and guidance. And at the right time, the team will organize an extended PGS workshop so that all members of the regulator are familiar with what is happening, and they can also give their input before the matter gets processed for final decision. So I would like to give that comfort, and also members to flag that and understand that something is being done with regards to some of the concerns that are raised by members and even stakeholders with regards to the current methodology. So I guess I actually touched on the second question that has been asked. And again, just to emphasize on table 4 there, table 4, if you look at it, Mr. Sibanda, again, you've got the two different sources. One is the JKM, which is your Japan Korea marker competitive benchmark. So the price there has been indicated in table 4. Now in table 1, you've got that Japan CIF, and the source for that is also very different in the way that also it gets calculated on that JCIF price. So that's the one difference you can notice there with the JKM as well as that Japan CIF. So they will be different. And then there's also acquisition costs that are mentioned in the methodology, and those acquisition costs are considered in this price, and as well as the trading margin. So this goes to the core of the concern raised by Mr. Gumede, which is this: that you will have the cost of gas, number one. In addition to the cost of gas, on table 1, you will see the trading cost, which account for something different, the trading assets. And then you again have the trading margin, which is what Mr. Gumede is stating, to say that let's look carefully at what is accounted and the purpose of it in the trading cost, because you cannot have the trading cost as well as the trading margin. And that is the point that Mr. Gumede says could be duplication. So that's what you have in table 4 then. In table 1, you've got the trading cost. In table 4, you've got the trading margin, of which trading margin are based on the acquisition cost. And that is the issue that we are saying. It will be much more clarified in the version that the team is working on and published for comment. Now, if you look then on table 7, where all of them now are included, you will see that there's now that JKM, the Japan Korea marker, that is shown there. And then you will see that there is acquisition cost. There is the cost for that acquisition cost. Then you also see the trading margin that has been put in there. And you also see the trading cost. So all of these elements, that what has been raised is a possible double dipping and double counting, which we'll look closely into. So so there isn't sort of duplication per se, but it is the components that are included in the price, following what the methodology provides. I hope that it clarifies the issue of those costs that are included in the different tables, table 1, table 4, but read it with table 7, including the explanation that I have just provided. I guess I responded to the unintended consequences and that they must be dealt with expeditiously. And I said already the methodology is out there for public comment, and there has been some bilateral meetings with the team and the stakeholders, and there's good input that has been provided by stakeholders. The issue of double counting has also been clarified properly, and that it will be taken care of. And the issue of JKM, also it will be given attention, JKM versus the JCIF, which is the term prices opposed to JKM, which is the spot price. So all of that will be looked at in the new methodology. Chairperson, I've covered all the issues and provided a clarification on how we are addressing some of these issues. Thank you.
Thank you very much, Ms. Massetti, for that. I do believe that the responses were adequate, or rather were comprehensive. If I can then just get an indication from you, Mr. Sibanda and Mr. Kumete, if you are satisfied with the questions, with the answers or explanations given, or if you've got any follow-up comment or questions to the response by Ms. Massetti. Okay, if there's no indication by hands, I would assume that you are answered. Thank you. Thank you very much. I see a sharp sign. Thank you, Ms. Massetti, for item 6.1. If we can then go to the recommendations, which are on page, okay, they're on page, what page, 13, I think. It's page 12. Yes, item 6.1. The recommendations, we've got 6.1.1. It is recommended to the regulator to approve Kwande Gas maximum price of gas for the period 01 October 2021 to 30 June 2022. And then we've got the table below explaining the different build-up in terms of cost of gas, trading margin, benchmark price, trading cost, and the maximum price per kilojoule. And then that 6.1.2, that the maximum price will not be adjusted, but will remain the same for the duration of the period of the approved maximum price. That the approved maximum price is exclusive of VAT. 4, that discounts are allowed and must be applied in accordance with the non-discrimination provisions of Section 22 of the Gas Act of 2001. And then 5, that the date of the energy regulator's decision on this matter becomes the effective date of the maximum price for monitoring purposes, and the maximum price will remain effective until the date of approval of another maximum price by the energy regulator. 6, that the licensee is required to apply for the next maximum price 4 months before the expiry of the currently approved maximum price, and the decision and reasons for decision are attached here to as Annexure A. That is a request for decision Kwande Gas maximum price for gas period 1 October 2021 to 30 June 22. Yeah, that all these items be approved. Can I then just see by an indication of hands who is happy to approve the item? I've got Mr. Kumeda, I've got Ms. Mpungos, I've got Mr. Sibanda, and I've got Ms. Massetti and Advocate Sithole. Thank you, members. A full house. The item has been approved, Ms. Massetti. And if we can then go to the next item, which is the Novo Gas Novo Energy application for maximum price of gas for the period 1 May 2021 to 30 April 2022. It's for approval. Over to you, Ms. Masetti.
Thank you, Chairperson. Chairperson, with this one, Novo has been in the market for quite some time now. And I would like members to know that with the new maximum price methodology, Novo struggled to put together an application that was sufficient and for the purposes of being evaluated by the energy regulator. So in 2021, as the period when the energy regulator indicated to all licensees that they must submit their applications by, I think it was by February or October of 2020. I think it was November 2020. So Novo submitted its application very late, and that application was materially incomplete. There were certain aspects that the team looked at, and the energy regulator through the pipe gas subcommittee was informed of the challenges in the application by Novo. So having worked with Novo, taking it through the deficiencies in its application, eventually Novo submitted an application that was considered to be complete. And that application then came through sometime last year and late last year, and it had to apply that such price be applicable as of May 2021 and up until April 2022. So it is important for the energy regulator then to consider this application, even though if you look at the fact that it is going to expire soon, but for purpose of compliance, it is important that we consider it, and also for another application that Novo is expected to lodge with the regulator, that at least they know that well, they have done it correctly, and then they can correct somewhere where they couldn't get it right. So, Chairperson, without wasting any time, since this is an independent trader buying from the incumbent, which is Sasol, so they are following the alternative method that is included in our methodology, which is one that will look into the competitive benchmark that is the JKM, and therefore Table 1 is similar to what we considered earlier on, where it has applied for that cost of gas be included in the maximum price, and then it has also shown the trading margin, and that trading margin is benchmarked using that Japan CIF, and then it has also included the trading cost, and the price then gets to the amount that you see there, 268. And the members again, their attention is drawn to the other tables that may actually, which is Table 2, that shows a proper summary there of the cost of gas, the trading margin, and the trading cost. And based on that, members, we would like you to also consider issues that were raised at the PGS as enumerated on paragraph 6.1, and members then are requested to approve that maximum price of 268, and noting that discounts are allowed, but they must be done in accordance with Section 22 of the Gas Act, and that price becomes effective on the date of approval by the regulator and remain effective until another price is approved by the regulator. This is so that we can avoid a situation of non-compliance in between. And the applicant is required to make sure that it submits its application in time, at least 4 months in advance. However, in this case, it may not be may not happen, and then the decision, as well as the reasons for decisions, are attached as Annexure A. Thank you, Chair.
Thank you very much, Ms. Masetti. Members, if I can just see by indication of hands if there's anyone who's got a question on this item, which is the application by Novo Energy for maximum price of gas for the period 1 May 2021 to 30 April 2022. Do we have any questions or comments? Mr. Sibande?
Thank you, Chair. Chairperson, my only concern here really is with respect to the clawback. And I'm aware that this emanates from the methodology, but it's just a concern that you have a licensee that has been operating and charging a price that was determined in 2013, and now eight years later we have to deal with a clawback that dates back to 2014. And not only that, but we are also spreading it out for the next 6 years. So up until 2028, we'll still be dealing with a clawback that emanated from 2014. Chair, I'm just raising this, just the reasonableness of allowing licensees to go on, and I'm assuming this was not a multi-year tariff or price, but to allow licensees, this latitude of operating with previously determined prices, and then come at a later stage, and then we have to deal with a clawback 8 years later. I'm not sure, Chair, perhaps we need to then look at our methodology and deal with this in the methodology, because even in law, not that I'm a lawyer, but you've got the concept of prescription, where after a particular time period you cannot raise a debt that was incurred three years ago or whatever it is. So I'm just raising this, Chair, as a concern, because looking at it, I'm not sure it actually paints a good picture, because you've got future customers that will bear the brand of a drawback that arose 8 years ago. And I'm saying perhaps we need to look at this in terms of the methodology and see how we prevent such. Secondly, I noted on table 10 that actually we have not done any adjustments to the operating expenses, except for disallowing the funding costs and the take-or-pay penalty, but everything else we seem to have accepted. And in terms of the explanation, it would seem like we were comfortable with that. But I was just saying, did we really look at each item and were satisfied that indeed these were prudently incurred? But yeah, it was just an issue to say we seem to have just accepted all those expenses without any adjustment. Thank you, Chair.
Thank you very much, Mr. Sibanda, for the question. Can I then request Mr. Komedo, can I ask maybe Ms. Masetti to respond to the question now, because we are losing Mr. Sibanda in 2 minutes. Can you do that, Ms. Masetti, just to respond to Mr. Sibanda, so that by the time we lose him, at least we would have gotten the response?
Thank you, Chairperson. Chairperson, I would ask the team to come in here, particularly with the question asked by Mr. Sibanda, the last one, as to whether the team has scrutinized each cost in the operational expenses, and are they satisfied, given that they've only made adjustments on some. With regards to the first question, on the issue of clawback, I think the point that he is raising is valid, and I do not think and I don't believe that there is, and it has to do with the timing, by the way, the timing itself, where at this point in time, the team seems to bring an issue of the clawback, of which clawback has not been dealt with for the past 5 years, and I don't know how it was accounted also in the books of this company, and also how they have raised that during the regulatory financial reports that will bring that get considered by the energy regulator. So the team will need to clarify that, particularly also because even though that the price itself that was scrutinized was in 2014, but Novo came to the energy regulator to say that the assumptions are not different, and therefore we asked the energy regulator to approve that the price we have remains. So if there was any issue of clawback on that price to try and protect customers as we should, that ought to have been part of the decisions, and that the licensee was informed of such possibility. And also, once we get the audited financials from the licensee, the team ought to have calculated the clawback from those annual financial reports that we get from the licensee, and check if there is any over recovery that is unduly that is mostly benefiting the licensee unduly, and indicate to the licensee what that clawback is on each year. And I doubt that if that was actually done, and how it was then accumulated up until this stage. So the team will have to then explain why that is done now only at this stage, and how that is covered by the methodology, of which I do not think that the methodology covers it if you have taken too long, because you've got to do it a year after. You know, once you close this year, and then you must look into you must analyze the financials, so that in the following year, at least you are able to indicate, so that the consumers or the customers also know how are they likely to be affected by such clawback. So it is fair on that basis. But once you exceed the period, there's an issue of fairness there that will arise, and the methodology does not cover any longer period that is over a year or 12 months following the auditing. Ms. Makoda, can you please come in here quickly, just to add on those two questions and clarify the last question from Mr. Smart?
Thank you, Ms. Massetti. On the issue of the adjustment on the operating costs, Chairperson, you will recall that on the first application, NERSA disallowed the operating costs, and the reason for that is because they had added the funding costs and also the take-or-pay penalties there. And then we then requested the applicant to adjust based on the NERSA's reasons for decision, which in this application, they have done that. So what we have done is we have looked at each and every item under the operating cost, and we are satisfied that they do meet the requirements of the tariff guidelines. Hence, we are asking or recommending to the energy regulator for approval. With regard to the issue of the clawback, Chairperson, you will recall that when Novo applied for a maximum price in 2013, there were some of the assets that were still in the demo stage at that stage, and including some of those assets would have meant that the maximum price becomes very high. And therefore, they asked NERSA that those, especially the operating costs, be capitalized for a certain years until they come to being commissioning or being used. And therefore, that is one of the reasons why we do have this clawback. And then secondly, between the period of 2014 and 2019, Novo requested that they do not submit a new application for a maximum price, but rather the very same application that was done in 2014 be extended because they believe that that maximum price is still relevant. But now in the new application of 2021, they then said that there are those clawback that NERSA must then consider for the period that NERSA extended the maximum price. And it is this very clawback that they have submitted it here. Now, with the first application that was amended, NERSA did not approve that clawback simply because they did not provide financial audited statements as evidence of the costs that were incurred. We then asked them to provide additional information in the amended application so that we can verify those costs that are included in the clawback. Hence, now we are asking that NERSA approves it because we have done an assessment on it, and there is also evidence in the form of audited financial statements which verifies that indeed there is clawback that needs to be incorporated. But we do take your point and Mr. Sbanda's point to say perhaps the period that has lapsed, it's far too long and it may not be prescribed or allowed by the tariff guidelines. Thank you.
Thank you very much, ma'am. I hope that Mr. Sbanda, you are happy with the explanations that have been given. Are you happy, sir?
I'm covered, Chair. I'm covered. But I suppose maybe it's something that the PGS may want to deal with in general, not specifically for this application, but just the general principle around these clawbacks. Thank you, Chair.
Thank you very much. Mrs. Banda, when you're ready to excuse yourself, we'll just sit by that, and then we will welcome you back as soon as you're in a position to join us back. Mr. Kumede, you may go ahead and pose your questions or make your comments.
Chairperson, I just forgotten to indicate in the first presentation that the comments that were raised in that under 6.1 apply here, but I'm actually in support. Thanks.
Okay, that is noted. Okay, thank you very much, Mr. Fumede. If we can then go back to the item, the recommendations are on page, I think 6 and 7, if I'm not mistaken. Oh, sorry. Yes, it is pages 6 and 7. I'll just go through the recommendations. It's to request the ER to approve Novo Energy's application for a maximum gas energy price of 268.21 per gigajoule for the period 1 May 2021 to 30 April 2022, with the table below explanation the various components of the that makes up the maximum price per gigajoule. And then 2, that the maximum price is for a period of 1 year and will not be adjusted. 3, that the approved maximum price is exclusive of VAT. 4, that discounts are allowed and must be applied in accordance with the non-discrimination provisions of Section 22 of the Gas Act of 2001. 5, that the date of the energy regulator's decision on this matter becomes the effective date of the maximum price for monitoring purposes, and the maximum price will remain effective until the date of approval of another maximum price by the energy regulator. 6, that the licensee is required to apply for the next price 4 months before the expiry of the currently approved maximum price. 7, the decision and reasons for decision attached here to as Annexure A, that is the RFD Novo Energy application for a maximum price of pipe gas for the period of 1 May 2021 to 30 April 2022. This item is for approval, members, and I've just read all the recommendations as enumerated in the actual report. Can I then just show by indication of hands who is happy to approve this item? Personally, I am happy to approve. And Mr. Kumete, we've noted that you're happy to approve with those reservations raised. Advocate Sithole, Mr. Mkhize, Ms. Masetti and myself, we have approved, and we've just lost Mr. Sibanda for a short while, but he will be back on board. Thank you, Ms. Masetti. The item has been approved. If we can then go on to the next item, which is 6.3, is the calculation of the maximum gas energy price on a monthly basis. It's an item for approval as well. If you can then take us through item 6.3.
Chairperson, this is a calculation of the maximum gas energy price. You'll note that there are two methods of calculating the maximum energy price. One is where we use the weighted average of prices that are charged in the hubs. We've got 3 hubs: the Henry Hub, and then the TTF in Europe, as well as at the NBP in the UK. Those were considered as competitive hubs, and the prices that are charged are believed to be prices that are influenced by the market forces of demand and supply. And then that has been used to benchmark NERSA's price, or to reference the local gas price. So that is the first method, and that method is used by SASOL. The second one is where prices are referenced to LNG, as we recognize that the second tranche of gas that will come to South Africa, it will be LNG. So LNG will become that, the LNG supply will become the competitor of the pipeline gas in South Africa. So hence then the LNG has been used to as sort of the second method, and also to facilitate investment, as we know that it will be in the form of LNG that will get another gas. So in that case, for now in the methodology, we recognize 2 of those LNG prices. One is the JKM, which Mr. Gumede also stated earlier on, that it is mainly because JKM is Japan, Korea. Those 2 countries are importers, net importers of LNG, and that LNG, which is reflected in the JKM, is mainly spot prices and comprise of 35%, I will say, of the global market. And then you've got the term price, the gas that is sold through JCIF, and then which is the term one. And generally, when you sell LNG globally, you will sell it over a period of time, get into contracts of 15 to 20 years, and therefore that is also the price that is used in the international market. Now, since we have these IPPs and also the emergency procurement, it was important that we recognize those, and the industry now would like NERSA to make these calculations on a monthly basis, so that it can assist the industry to follow what is happening in the gas market. And this is also required by Eskom through several engagements with NERSA via the IPP office and via the department. And we therefore, based on that, feel that this calculation is very important in the market. And we recommend that NERSA approves that the FTRM, primarily responsible for pipe gas, be delegated to confirm the calculations in the format that are usually done, and then also to approve that the publication thereof of these maximum gas energy prices be done on a monthly basis. And secondly, to request the energy regulator to approve that the calculated maximum gas energy price be submitted to PGS on a quarterly basis for noting, just as a measure of checking that delegated authority to the FTRM. I think that's what paragraph 171.2 seeks to do. Thank you, Chairperson.
Thank you, Ms. Masetti. Members, we've got the item as presented by Ms. Masetti. That is item 6.3, which is the calculation of the maximum gas energy price on a monthly basis. And she's given us the various benchmarks that were used and how each one of them work. And if I can then get through hands, if there's any comment that any of the members might have or question to the presentation of the calculation as presented by Ms. Masetti. Can I then safely assume, without any indication of hands, can I then safely assume that the item is quite straightforward and there are no comments or questions to the item? Okay, that being the case, then I'm going to go to the item which is for approval and go through the recommendations which are on page 6 under item 7. It is recommended that the ER approve that the FTRM primarily responsible for pipe gas regulation be delegated to confirm and approve the publication of the maximum gas energy price on a monthly basis. And 2, that the calculated maximum gas energy price be submitted to PGS on a quarterly basis for noting. Members, are we happy to approve? Mr. Gumede, is that hand approving? Okay, yes. I am also happy to approve. I note Mr. Gumede, Madam Masetti, the advocate, myself, and also Mr. Mkhize. The item has been approved, Mr. Masetti. You have your decision for item 6.3. It has been approved. If we can then go on to item 4, which is Chairperson, yes.
Chair,
Mr.
Yes, I was voting as well, but I had raised my hand for a separate reason to indicate that although there may not have been comments here, I would have liked it to have been noted that most of the other members that are sitting in the committee, are sitting at ER now, other than yourself, are actually members of PGS, and therefore the fact that we may not have raised comments and questions here, it doesn't mean that this matter had not been deliberated in detail when the matter served before PGS. Thanks.
Thank you very much, Mr. Gumede. Yeah, that is noted. The item has been deliberated in great detail and issues and concerns raised, and they were addressed in the PGS meeting. And yes, despite the fact that there are no comments or questions posed now, it does not necessarily that the matter didn't get the necessary attention. That is noted. Thank you, Mr. Gumede, for that explanation. If we can then go to the item for noting, which is item 6.4, which is frequently asked questions in respect of NERSA's determination of inadequate competition in the pipe gas industry in terms of Section 21(1)(p) of the Gas Act. Ms. Masetti, if you can take us through the item.
Thank you, Chairperson. Chairperson, this item here is meant to assist stakeholders in understanding the decision that the energy regulator has taken on in coming to a finding that the state of competition in the gas industry is still inadequate. And we would like the stakeholders to then understand what NERSA means when it says competition is inadequate, as that phrase is not defined in the Competition Act, which is the governing legislation on competition matters in South Africa. So we then provide a framework of how do we get to analyze that finding, as well as the approach of the inquiry itself and the key variables that assist the energy regulator in conducting its inquiry on adequacy of competition and how it navigates that inquiry up to the point where the energy regulator is satisfied that now the finding of inadequate competition has been properly made, and there are factors and economic variables that support that finding. So we provide that kind of explanation and clarification for transparency as well as for predictability by the industry, so that they understand why we will then say that NERSA must still approve maximum prices because competition is not adequate. We have provided all of those key questions in this assessment, and also explained some of the barriers to entry that we believe are the ones that are constraining this market from growing, and also constraining competition and investment into this market. And there is a number of those other questions that we have put in here, Chairperson. Without wasting any time, Chairperson, the responses and guidance on all of those questions are provided herein, and we request that the energy regulator notes these frequently asked questions that the PGS has considered and approved. Thank you, Chair.
Okay, thank you very much, Ms. Masetti. Members, you've got an item for noting that Ms. Masetti has just presented to us to say that, there has been questions on our determination of, sorry, yes? Someone is talking in the background? Okay, thank you. That there has been a determination by NERSA of inadequate competition in the pipe gas industry in terms of Section 21. And a framework has been developed to just illustrate the factors that have been taken into account and considering in assessing whether indeed there is enough or not enough competition in the industry. The item is for noting. Do we have any comments on the item itself, or do we have specific questions that would like to pose over and above what has been presented by Ms. Masetti? Personally, from myself, I am happy with the presentation as is, and I think it does highlight and explain in detail on how this exercise is done and what are the factors that are taken into account to determine if indeed, and it's a very key exercise that need to be done, seeing that there's no other entity or SOE that is doing it, or regulator that is doing it. So I think it's a good thing to know, seeing that we are the regulator for the industry. Do we have any comments or questions? I know most people are members of the PGS, so they have had sight of this before. If there are no comments or questions, then can we go ahead and note the item as per recommendation on 14, which is on page 4 of 85, to request the energy regulator to note the publication of the frequently asked questions in respect of NERSA's 2021 determination of inadequate competition in the gas industry in terms of Section 21(1)(p) of the Gas Act on NERSA's website. The frequently asked questions are attached here too as Appendix A. Can we just get by indication of hands, Mr. Gumede, Ms. Masetti, Mr. Mkhize, and myself are happy to note item, as well as Advocate Sithole. The item has been noted, Ms. Masetti, and I do believe that we've come to the end of your items under Pipe Gas Subcommittee. And thank you very much, Ms. Masetti, for your presentations. You've got your 3 approvals for 6.1, 6.2, and 6.3, and the noting for this item FAQs. We are now going to go to agenda item 7, which is the Electricity Subcommittee. We've got reports from the chairperson of the Electricity Subcommittee, various applications which are for approval, and then there's some reports that are for noting. Mr. Gumede, I think most members, even myself, are members of this subcommittee, but Mr. Gumede, if you can then take us through the item agenda 7 and start by presenting those various applications by about 22 preferred bidders. Over to you, Mr. Kumet.
Thank you, Chairperson. Again, good morning to members and colleagues and all stakeholders who have joined via all platforms. Chairperson, as you've indicated, the challenge, I think, for the electricity subcommittee is that all current members of ER are actually members of the ELS. Although perhaps because of a number of special meetings that may have been held, we may not have all been present. And therefore, it does present a challenge, I think, Chairperson. So I'll just in the main read into the record some of the issues that were read, which may have been raised at the committee, and then of course to then put the matters forward to the ER now for a decision. So, and this applies to virtually all of the matters that I'm going to be presenting. In respect of item 7.1, Chair, I'd like to first start with an apology that I actually didn't sign the 2-pager. It was an oversight. I thought I did. Apologies for that. But the first matter, Chair, is the ELS is here at the ER to request the energy regulator to approve the 22 bid window 5 preferred bidders, which are listed in table 1, and that those be issued with generation licenses. Again, Chair, just for the record, just to indicate that the Department of Mineral Resources and Energy, through the IPP office, released the RFP documents for the procurement of 2,600 megawatts of renewable energy, comprising 1,600 megawatts from wind and 1,000 megawatts from solar on the 12th of April 2021. And the RFP attracted 102 bid responses with an oversubscribed total of 9,644 megawatts, which indicates the interest in this program. After evaluation, 25 preferred bidders out of the attracted number of 102 as indicated, 25 were then selected with a total contracted capacity of 2,583 megawatts, consisting of 1,608 megawatts of onshore wind and 975 megawatts of solar PV. 3 applicants, Grootfontein PV Pty Limited, Grootfontein PV2 Pty Limited, as Grootfontein PV3 Pty Limited, did not advertise their application as required by the Electricity Regulation Act, and therefore they are not part of this 22 that is here for the decision. Chairperson, not to waste too much time, just to indicate this matter was deliberated at the ELS. A number of questions were asked. Firstly, in respect of whether is it not time to revisit the refit tariff system, as it was no longer relevant. And also, the key issue that I thought I would then raise again is a question of whether now that, if especially when we look at solar, all of the solar ones are actually below 100 megawatts. So the question is whether, since the advent of the registration threshold having been increased to 100 megawatts, whether most of those applicants would not opt to be registered rather than to be licensed. I think I just want to comment a little bit on that. That remember that these ones that are procured in fact end up with the PPA with the utility, which PPA at this stage is also guaranteed, has got sovereign guarantees, and therefore there is value. That's a that indicates bankability, but it does not mean that, for instance, that this is the only route. for people that may be wanting to actually go down this particular green energy supply. It does mean that if there can be other blue chip off-takers who sign an equivalent of the PPA that could be signed by Eskom and actually guaranteed by the state, that they will then be able to go down that route. They don't need to actually go through the IPP office. However, for those that want to actually have bankability, in the main, they're probably going to have to continue down this route, because there is a need to actually have a some kind of security of demand to be able to have a project that is bankable. So that's one issue that I thought I would flag, Chairperson. Why the main issue also that I also want to raise is the question of why is the ER requested to approve a tariff that has been decided outside of the NERSA processes, and the question that was asked is, should the ER not just note the tariff, which has indicated that unfortunately Section 15.2 of the Electricity Regulation Act obliges the energy regulator that for any licensee, they cannot charge any other price other than that has been approved or set by the energy regulator for any licensee. So it's only for registrants that this may not hold, but for any licensee, Section 15.2 applies to them, and only the tariff set or approved by the energy regulator can be charged. And also, I just thought, Chair, to be useful to just raise the indication that all of the tariffs that are here that the regulator is asked to approve, all of those tariffs are actually indexed using CPI going forward. So, Chair, the decision that we are here to ask the regulator to make that decision is that the energy regulator is asked to approve the 22 preferred bidders, that they be issued with generation licensed, as summarized in Annexure 1, Chair. I would assume that you will read those in for the record, and that the energy regulator also approves the tariff between each preferred bidder and Eskom. And then thirdly, that the respective decisions and reasons for decision documents as attached in as Annexure B also be approved. I thank you, Chair.
Thank you very much, Mr. Mkhize. Taking into account that all members are members of the ELS, do we have any additional comments or issues or questions that would like to raise at this stage that maybe for some reason were raised at the ELS and we feel that we need to just emphasize those? Any questions or comments, members?
Just to say that, Chairperson, on a lighter note, it was Kwabe who was presenting, not Kabazela. Thank you.
Okay, thank you very much. That is noted, Ms. Maseti. Members, there being no question from myself, no further question or comment. If I can then take us through the item, we've got those 22 licensees, preferred bidders rather, that applied for generation licenses, and the recommendation is on page 4 of 5 of the item. I will just read the recommendation for the record. It is recommended that the energy regulator approve, 1, that the 22 preferred bidders be issued with generation license. 2, the tariff between each preferred bidder and Eskom. That is approved, that the ER approves the tariff between each bidder and Eskom. And 3, that the respective decisions and reasons for decisions documents as attached in Annexure B be approved. Are we happy to note to approve the item? Personally, I am happy to approve the item. Advocate Sithole, Ms. Maseti, Mr. Mkhize, and Mr. Gumede, and myself. Item 7.1 1, which is the application for generation license by 22 preferred bidders under bid window 5. 2-pager and they are enumerated from 7.1.1, which is Wolf Wind Farm, RF Pty Ltd. The second one is Colescope Wind Energy Facility, Dwarseg Wind Farm. The fifth one is Sutherland Wind Farm Pty Ltd. The next one is Riedrag Wind Farm Pty Ltd. The seventh is Senkrau Wind Farm with Energy Facility. The eighth one is Pezugomoya Wind Power Pty Ltd. The ninth one is Brent Valley Wind Farm, RF. And the 10th one is Ridcroft Wind Farm Pty Ltd. The 11th one is Beaufort West Wind Farm Facility Pty Ltd. The 12th is Tragas Wind Pty Ltd. The 13th is Kentani Solar Facility Pty Ltd. The 14th one is Clairefontaine Solar Facility Pty Ltd. The 15th one is Clairefontaine 2 Solar Facility Pty Ltd. The 16th one is Lely Hook Solar Facility Pty Ltd. The 17th one is Brak Lachte Solar Facility Pty Ltd. The 18th one is Sonoblomo Solar Facility Pty Ltd. The 19th one is Duplessis Solar PV1 Pty Ltd. The 20th one is Engie Kenhardt Solar Project 3 Pty Ltd. Then the number 21 is Engie Kenhardt Solar Project 2 Pty Ltd. And the last one on the list, which is number 22, is Engie Kenhardt Solar Project number 1 Pty Ltd. Those are the items that have been recommended for approval, and they have been approved as indicated by all the members who are in attendance, that is except for Mr. Sibanda, who has had to be excused for a short while.
Chairperson, I'm back and I voted to approve, Chair.
For some reason, sorry about that. For some reason, I missed you. I apologize for that. Okay, Mr. Kumete, the item has been approved. It is the application for 22 preferred bidders. And then if you can take us to number 7.2, which is the exemption for Greenstone Energy Limited to register for the generation facility in accordance with the licensing exemption and registration notice for 45266 of 5 October 2021. Over to you, Mr. Kumete.
Chairperson, thank you, and I'd like to thank members also for approving the first one. But also maybe just the point that we should have stressed is that the prices that have emanated from this have really improved. I mean, we're looking at an order of 37 cents per kilowatt hour in terms of solar. And that's really going the right direction in terms of in terms of solar. Yes, of course, these are still scale. So it's not like if we have a rooftop, one would actually be able to get those kind of prices. But that's the direction that the cost of solar is going, and we must indicate our appreciation of that. Thanks, Chair. And then just to move on to item 7.2. This item, Chair, is actually a request for. It is for approval. However, it is one of those. I think it's more for noting in the sense that the applicant, in fact, is one of the first ones who are actually exempt, because in terms of the notice, in terms of Schedule 2, is that they actually don't have a connection point. And therefore, because they don't have a connection point in terms of that notice, they are exempt from both from applying both for a license and also to be registered. However, there are other issues that then emerge from this. So that's why this item was actually brought to the ELS for noting. especially because of the likely challenges that may then emanate later when this particular generator perhaps will create a microgrid, might not have a point of connection, but will have off-takers, and there might be a role in terms of distribution that the energy regulator would be obliged to actually play. So just to indicate again, because all members of the ER are currently are members of the ELS, just for the record to indicate that on the 11th of October 2021, Greenstone Energy RF Ltd, here in Accra known as Greenstone, submitted an application for registration certificate to operate a 5.8 megawatt gas to power generation facility, which will be owned by Greenstone, and this will actually be used for commercial purposes. Greenstone intends to sell power to Adam G Energy, and they have entered into a PPA. So they're not selling to Eskom. It's a PPA between a private player and this private generator with no connection, with no point of connection. The PPA is also attached here. Greenstone will be supplying power to 13 sites that are wholly owned by Adam G. The list of sites are here to attached as Annexure C. Greenstone intends to apply for a distribution license. Again, this is the microgrid type of license that would need to be considered for the electricity network that will supply the 13 sites that are owned by Adam G. As indicated, the applicant does not have a connection consent letter from the distributor, that is either municipality or Eskom, because the generation facility has no point of connection. So, Chairperson, we are here as the committee to recommend to the Energy Regulator to note the exemption of Greenstone Energy Limited to register its 5.8 megawatt gas to power generation facility. Thank you, Chair.
Thank you very much, Mr. Kumete, for that presentation. Members, we've got the exemption for Greenstone Energy to register for the generation facility in terms of the licensing exemption and registration notice 45266 of 5 October 2021. And the background there too has been explained by Mr. Kumete on the reasons why they are exempted from registration and from applying for a license. That's because they don't have a connection point. If there are any additional comments over and above what was already raised at ELS, or comments that we might have as members, can I please get those through an indication by a show of hands? I personally do not have any comment or question on the item. The item is for approval, but also, as Mr. Kumete has mentioned, it's more for noting so that we're made aware on the background to this and why they are not exempted. And then the recommendation is on page 3 of the item. If we can then go to recommendation under item 6. It is recommended that the energy regulator note the exemption for Greenstone Energy Limited to register its 5.8 megawatt gas to power generation facility. Are we happy to note, if we can then just show by indication of hands? Ms. Maseti, Ms. Pungose, Mr. Kumete, Mr. Mkize, and Mr. Sibanda. The item, and Advocate Sithole. The item has been noted, Mr. Kumete. It has been approved because we're happy to approve it, but then the recommendation says it's for noting. So we will note the item, but we're happy to approve it. And then if we can go to item 7.3, which is the reasons for decision for the Eskom application for a 3-year negotiated price agreement with Sublime Technologies situated in Krow in Mpumalanga. If you can please take us through the item, it's for approval.
Thank you, Chairperson. As indicated, this item is here for approval. It has served before the committee. Firstly, I think when we're deliberating the issue of it being released for public comments, and it was hence commented on, and then after the public public comment period, it was then brought back to the ELS for a decision, and the ELS or sorry, it was brought back to the ELS for recommendation to the ER. And so the committee is here to request the ER to now approve actually the way it's written, it's incorrect, Chairperson. It's here to actually to approve, to request the energy regulator to approve the decision, and that decision is captured on page 12 of 65. Which Chairperson, I would assume that when we are when the matter is put on a vote, that you'll be able to read that page 12 in for the record. I apologize on behalf of the team, as we had indicated that we need to have those recommendations to be standalone. So we would need to actually incorporate the actual decision into this recommendation. But that's what it is here for, Chairperson. I will not waste the committee's time, Chair, on this, as I'm indicated that it's been deliberated a few times. But the main issue, the main concerns that were raised by the committee was to understand whether this NPA covers Eskom's cost of supply to this customer, and it was indicated that it is so, and it also provides a reasonable margin. And also to then members also sought clarity on what the impact of this would be on other customers, and clearly has indicated this that this is the NPAs. I know sometimes they come across incorrectly as if there actually is Eskom supplying below its cost to serve, and that is actually not correct, and therefore it's not like that prices that are offered to these customers are actually lower than the cost to serve, and therefore these customers are subsidized by other customers. Perhaps what might be correct is that perhaps their contribution to the subsidy of other customers may be limited by virtue of the fact that they are on an NPA. But Chairperson, the decision as indicated that is requested of the energy regulator is on page 3, and it is about the decision, and also that the energy regulator then approves that the RFD it approves the RFD and approves that the RFD is then shared with Eskom, and also that the RFD is also published on the NERSA website. I thank you, Chair.
Thank you very much, Mr. Kumete. Members, do we have any questions over and above that was presented and what could have been raised at ELS on this particular item, which is the NPA as presented by it's the reasons for decision for the Eskom application for a 3-year NPA with Sublime Technologies in Kriel, Mpumalanga. Do we have any additional comments or questions to that item over and above what has been presented? Okay, then being no hand that has been raised, if I can then read the recommendations on page 10 of the report under number 12. Recommends to the ER, it is recommended that the electricity subcommittee recommends to the ER approval of the decision and reasons for decision for the Eskom Holdings Pty Ltd application for 3-year NPA with Sublime Technologies Pty Ltd situated in Kriel, Mpumalanga. The second one is recommended to the energy regulator approval to share the decision and reasons for decision with Eskom. And number 3, recommends to the energy regulator to publish the decision and reason for decision on the NERSA website. And then I'll just go on and read the actual decision on page 12 of 65, which is the decision on the 3-year negotiated pricing agreement for Sublime Technologies and PTY Ltd situated in Grill Mpumalanga by Eskom Holdings SOC Limited. Based on the information, public comments and analysis performed on Eskom 3-year incentive private pricing package application, the National Energy Regulator of South Africa at a meeting held on the 31st March, which is today, decided as follows: that the special pricing agreement between Eskom Holdings SOC Limited and Sublime Technologies Pty Ltd Sublime situated in Grill Mpumalanga be approved. 2, the approval of the negotiated pricing agreement is for the power demand of 22 MVA limited to a maximum of 135 gigawatts per hour per annum. Number 3, the special pricing agreement will run for a maximum of 3 years and will commence on the 1st of April 2022. Number 4, Eskom is to charge a special tariff of 97 rands and 36 cents per kilowatt hour on the 1st of April 2022, with effect from the 1st of April 2022. The proposed NPA tariff will be escalated annually on 1 January by PPI plus 2.5% for the duration of the agreement. Sublime Technologies, number 5, Sublime Technology Pty Ltd will provide interruptibility to the national system operator for utilization when the system is constrained. Number 6, Sublime Technologies Pty Ltd must consume, or its forecast annual consumption must be a minimum of 80 gigawatts per hour, and or the load factor must be greater than 70%. And number 7, Eskom must submit progress reports for Sublime Technologies Pty Ltd NPA agreement 6 months after the effective date, and thereafter every 6 months until the end of the special pricing agreement, to enable NERSA to monitor the implementation of the agreement. This is the end of the actual decision, and which is part of the approval as well as part of the recommendation that I've read earlier. If then we can just get an indication from the members by hands if we're happy to approve the item. Okay, I've got Advocate Sithole, Mr. Sibanda, Mr. Mkhize, Mr. Gumede, Madam Maseti, and myself. The item has been approved by all members in attendance. Thank you very much, colleagues. We're going to go on to the next item now, which is item 7.4, which is a review of Eskom's cost of unserved energy methodology and 2020 update of the COUE. That's the cost of unserved energy values. Thank you. Take us through that item, Mr. Kumet.
Thank you, Chairperson. As indicated, we are here to request the energy regulator to approve the Eskom's cost of unserved energy methodology and the 2020 update of the COE values. Eskom, as a licensed network service provider, is required to comply with grid code, by developing a COUE methodology to determine COUE in order to ensure the orderly and economic expansion of its network infrastructure to meet future electricity demand with an acceptable level of reliability. The COUE methodology was initially approved by the Energy Regulator in 2015 with a condition that it must be reviewed every 5 years. In line with the Energy Regulator decision, Eskom submitted the reviewed methodology, inclusive of the 3 proposed changes. NERSA drafted the consultation paper on the 5-year methodology review and the 2020 update, which was approved by ELS and published in newspapers and the NERSA website for public comment. 2 stakeholders that submitted written comments by the due date did not object to the three changes that were proposed by Eskom. The decision and the RFD on the Eskom's COUE methodology and the 2020 update on the COUE values was considered by the Electricity Subcommittee on the 8th of February. And Chairperson, as indicated, all members are members of the committee. We are here, Chair, to request that the Energy Regulator approves the decision and also the reasons for decision on the reviewed Eskom COUE methodology with an associated model, and the COUE values for 2020 are attached as Annexure A, subject to the following conditions being met: that the review of the COUE methodology should be conducted every 3 years and not 5 years, as was initially done, but the request was that it changes from 5 years to 3 years, and that the input data of the COUE methodology and the values must be updated annually for the next 3 years, starting with the update in 2022. And that the decision and the reasons for decision, Chairperson, that those be published on the NERSA website. Thank you.
Thank you very much. We've got that item that has been presented by Mr. Kumede. That is review of Eskom's cost of unserved energy methodology and the 2020 update of the COUE values. Do we have any comments or questions on the item? Okay, there being no hands at this stage or comments, I think as it has been mentioned that this item has been discussed and deliberated in greater detail as well at the ELS, and I don't have any additional comments or question on the item because all the issues that were raised have been addressed. The item is for approval and the recommendations are on page 3. And the decision itself, the draft decision for approval by us is comes thereafter. So I'll just go through the recommendations as have been presented to us on page 3, and then it is recommended. It is requested the energy regulator to approve 1 decision and reason for decision of the reviewed Eskom COUE methodology with its associated model and COUE values for 2020 attached as Annexure A, subject to the following conditions being met. 1, the review of the COUE methodology should be conducted every 3 years. And 6.1.2, the input data of the COUE model and COUE levels must be updated annually for the next 3 years, starting with the update of 2022. 2, that the decision and reasons for decision document be published on the NERSA website, and I'll go to the draft decision for approval today. I'll read through that, which is in Annexure 1, which is about this matter, the review of Eskom's cost of unserved energy methodology by Eskom Holdings. Based on the available information and the analysis, submissions, and comments received on the review of Eskom's COUE methodology, the Energy Regulator at its meeting held on 31st March 2022 approved 1, the reviewed Eskom's COUE methodology with its associated model and COUE values for 2020, subject to the following conditions being met. A, review of the methodology should be conducted every 3 years. B, the input data of the COUE model and COUE levels must be updated annually for the next 3 years, starting with the update of 2022. That is the recommendation, members, and the actual draft decision that we need to take today. I've read both of those. Can we then just show by indication of hands if we are happy to approve that? Ms. Maseti, Mr. Kumede, Advocate Sitole, Mr. Sibanda, Mr. Mkize, and Ms. Mbungose. The item has been approved, Mr. Kumede. that is the review of ESCOM's COUE methodology and the 2020 update of the values. Thank you. The item is approved. If we can then go on to the next item, which is 7.5. It's a publication of ESCOM's MYPD4 regulatory clearing account application for 2021 financial year. Over to you, Mr. Gumede, to present the item. The item is for noting.
Thank you, Chairperson. As we've indicated, this item is here for noting. So I won't go into much detail into it. Just want to start with, so it's basically what we are here to do is to ask the energy regulator to note the publication of the ESCOM's MYPD4 regulatory clearing account application for the year 2020-21, which is the second year of the MYPD4. Chairperson, I just want to start with an apology that the table 1 is not visible, at least not in my version of the submission. It's not visible, but that table is exactly the same as the one that can be seen on table 1 on page 5. So Chairperson is again, because all members of the ER are currently members of the ELS. I won't dwell onto this. I just want to indicate, Chair, that it is for noting and that this matter will come before the energy regulator for approval once the matter has been consulted on and the outcomes of that consultation had been dealt with by the ELS. We will then come back with a request for a decision. I thank you, Chair.
Thank you, Mr. Gumede, for that. Members, do you have any comments, or are we happy to note the item? It's the publication of ESCOM's MYPD4 regulatory clearing account application for the year 2020-2021. Are we happy to note the item? We are noting Mr. Mkhize Maseti, Mr. Sibanda, Mr. Gumede, and myself. Advocate, I don't know if you did raise your hand to note. Okay.
I did, Chair.
Okay, thank you. It doesn't appear on my screen. Sorry about that. And you were appearing earlier on. I think you've moved me to the next screen. Okay, the item has been noted. And then we've got the last item for the electricity subcommittee, which is item 7.6, the minutes of the previous meetings. The minute that we have now is for meeting 184, which took place on the 8th February 2022. Are there any highlights that you'd like to bring to our attention of any issues that were discussed in that meeting and as they are reflected in the minutes of that meeting? If you can just take us through that, if there are any highlights you'd like to make.
Chairperson, no, I do not. But I just want the members to note that although this is attached, I assumed that we're going to actually approve the other minutes as well, which have been long outstanding. I remember those were signed off. So apologies that they are not included, because the idea was that we're supposed to approve all of the other minutes as well that have been outstanding. But I do not have any issue that I would like to flag, Chairperson. Just to request the members to note. Thanks.
Okay, thank you very much, Mr. Gumede. Members, do we have any specific questions that you might have on these meetings? I know you are all part of this meeting, and they've been considered by ELS, after the meeting of February. Are we happy to note the item? I am also happy to note the item. The minutes of the meeting of meeting number 184 of 8 February 2022, and then we hope all the other meetings that you wanted noted. will be brought in the next ER. Unfortunately, they were not attached in the pack. Thank you very much, members. The minutes have been noted and by the members. If I can then request that the meeting is now officially closed to the public, and if IT can just do the honors and let us know once